What's up, my fellow traders? Hope you all having an awesome day. A quick one here on net gas, gold, silver, crude oil, starting with natural gas. The reason I'm uploading video a bit late because I was waiting for the price to hit my level right here. Otherwise, the video would be same as yesterday's. But now as price just hit my level of major resistance, and at this point it is also at the weekly level. Now first I want to show you how long does it take to hit this level. It takes all the way from here to here around 76 to 80 days to get to this level, and that is something we call patience. We had lots of moves ups and down. Once we have broken below, we were only looking to sell this market. We have taken sell trades, then we bought here, we are looking for buy trades, then we were trading above 50 EMA, we were looking for pullback trades. Till when? Till the price hit the next level of major resistance. So all the way from here till here, it took a while, but in between we were able to take some good trades. So that is something we need to understand in trading. Once we are above 50 EMA, look for short-term buy trades, talking about 4 hours, till the price get to the next level of resistance. Once the price hit the counter trade zones, we're going to start to look to sell this market. We're going to go against the trend till the price break below 50 EMA, and then we're going to start to sell this market till the next level of support. So as price is now at the level of support, with that we are overbought in the RSI. Now it is very important. The next candle must forms as a bearish engulfing candle. If that happens, let's say if you have a bearish engulfer right here, I will go short using one target. First target ATR, second target will be bigger than the ATR. I'll keep my stop loss above the wick around ATR, and then I will go 1 to 1 and 1.4 to 1. You can manage your trade. Still 1.2 to 1 is preferable for the smaller target as well, if you want to go a little bit above 1 to 1. So that is something I'm expecting. Now I'm expecting a next candle as a bearish engulfer. Now it is very important this candle just opened now. It is very important this candle must close and close as a bearish engulfer, including the wick as well, for the strongest entry. If it does not include the wick, that's still going to be entry, valid entry, but that won't be strongest entry. In that case, I will not take a risk, but it's totally up to you if you want to take it. It sometimes works fine as well. So keep an eye on next bearish engulfer, and if there is no bearish engulfer, price just stays green. In that case, just simply look for the pullback and engulfer above 50 EMA. We are only looking to buy this market till we get a bearish signal from this level. This level was already mentioned in my yesterday's video for Capital.com, Ovanda, NEMEX and MCX as well. So that is why we need to look for a next candle. Since the price just hit the major structure, next bearish engulfer will confirm my entry, which is my bearish aggressive entry. If you're not an aggressive trader, you can always look for double top as well. Rejection A, rejection twice, and then you can go short from here. So that is something we need to look here if we have a bearish engulfer right at this level. Again, no bearish engulfer, simply look for the pullback above 50 EMA and look for bullish engulfer to buy again till we see a bearish condition. Whichever you get first, we're going to take that entry first. If the price, let's say, move inside the zone again, and in that case I will still look for my bearish aggressive entry or double top entry or pullback entry bullish as well. So keep an eye. We are now at the major structure level. Now, a couple of videos ago, I've also mentioned that we have this bearish head and shoulder pattern. Now, this bearish head and shoulder pattern still has a room till this area. Means we are now aligning with a higher time frame as well. If the price forms a bearish engulfer on a higher time frame, that will be a signal that price is going to fall down here as well. Or it forms a pin bar or 382 candle, it will fall from here. But that's going to take lots of days and weeks, but in that process we're going to look for bearish trades, pullback trades, aggressive entries, exit, look for the next entry condition, and keep on taking our trades with conditions once it forms. Now on NEMEX, the zone is a bit higher, so don't get confused if the price forms a bearish engulfer right here. In that case, we are overbought. I have one more strategy which I used for my trading. In that case, we can still expect a deep pullback that is enough to hit your targets. Since we are overbought, this engulfer will likely to give you a good and deep pullback which you can capture and exit your trade after 1 to 2 ATR target is hit. Look for bullish engulfer above 50 EMA again and buy till this level from where we're going to sell this market again. So that is very simple. Next bearish engulfer will be aggressive sell signal on NEMIX as well. Now here on Ovanda, the price still didn't hit the level above. So for the Ovanda traders, keep looking at this level and keep looking for your buy pullback trades. That is all we're looking at. Pullback entry bullish. That is all we're looking at. If we get a condition on capital.com, we are still going to go for the trades. But on Ovanda, since we are overbought, and if we have a next candle as a bearish engulfer, means that is a signal we can likely see a nice and deep pullback. And then after that, we're going to look for the buy trades, which is of a pullback entry bullish. So very simple. Keep looking for these conditions I've just mentioned. Aligning with capital.com and Ovanda. That is why bearish engulfer, double top, or pullback entry bullish. These are the entry conditions I'm looking at, whichever we get first. Nicely hit the targets, and now we are looking for conditions. Same goes with MCX audience. Look for bearish engulfers or double top or pullback entry bullish above 50 EMA. Very simple now. We are now at the level of resistance, and we are now going to look for the entries. Now here on gold, we are now broken out since, as I mentioned yesterday, with this red candle. Now right here, that would be an aggressive entry, and it might push down from here. In case you're wondering, that is not a valid pullback entry bearish. Now I don't take these entries anymore, but that is something I do look at when I look for the breakout. This could be a fake out as well. That is why it could be aggressive. And again, I'm not taking that entry. So it is something who are looking for quick scalp. Now at this point, for gold, I'm not bullish for gold anymore. I'm still waiting for the price to break below with a solid momentum. This is not a break. It is just a wick that has gone back up. This candle has closed back above in this box, as you can see. I still want to see a solid break and close. Once that happens, I'm just going to look for my pullback entry bearish. We were already prepared to sell from here. That has pushed down, and now either we're going to sell after the break, or we're going to look for the pullback. Let's say if the price dramatically push up, we're going to look for the double top trades from here. So I'm not buying. I'm only looking to sell this market. That is all I'm looking at. Buy will only happen once we are dramatically close above 50 and 20 EMA. Short-term buy till here. Then long-term buy will happen once we are broken above this high. So let's see how this goes. This could be a reversal from here, but we need to see some more momentum and some bearish move. For overall, I'm bearish for gold once we are completely closed with a solid red candle. We are below 50 and 20 EMA on 4 hour. Again, that is very crucial. We are still not closed yet, means we are not completely bearish. Close with a solid candle is must. In that case, we will close below 20 EMA on daily, and in that case, we can see a likely fall to 50. Now, this fall on daily, I want to show you on 4 hour. Will be till here, and that is also the level of structure. As you can see, this will be a very big fall on a daily to 50 EMA. That is 10,000 pips. So that is something we are looking at on higher and smaller time frame. That is why break and close is very important. Here on silver, nicely pushing down. And if I look here, that is not a valid pullback entry bullish. In case you are wondering, let me double check on my IC Markets platform. Okay, right here, that is my pullback entry bullish. In that case, I'll still go for my trade, which will be 1 ATR, which is 28 cents. If you want to go for it. For this little scalp, that is 28 cents. Looks like this. So on IC Markets, if it is valid and if it's valid on your own platform, take your trades on your own risk. Shouldn't be taken as any sort of trading advice. It is a method I personally trade and just sharing that with you. Right here, the solid bearish pin bar, 382 candle entry for my students. A shout out, that is a good example of that as well. But now we have a bullish engulfer and 1 ATR target I'm expecting out of silver if you're looking at this candle. So let's see how this goes. I'm not selling silver. It can still bounce. I still form a double top right here and fall back down. For my next pullback entry bullish, I want to see a break above this high, but that is itself an entry. I've just shown you 1 ATR on Ovanda will be exactly like this. So we'll see how this goes, if that plays out or not. That happens on IC Markets. Now, let's say we are broken and closed below 50 EMA. In that case, the stop loss will hit and price will crash down, and we are only going to look for sell trades. So finally, we had crude oil, and as you can see, we are not broken above. That is why I keep on repeating that it is very important to see a close. Instead, the price just formed a double top here. Now, that is not a major structure level, but looking at the previous zone, that could act as a level of previous structure. And we do have a divergence coming here in the RSI. So that shows a weakening in momentum, and looking at that, we can see a likely fall to at least till 50 EMA. That is again a very solid move. If that happens, that is $3 move, $3.5 move here in crude oil. So let's see how this goes. Expect a likely pullback 250 EMA, and if that happens, as we have now a new high, we can start to look for the bullish engulfer to buy again till this level. But for now, I'm looking for a nice push down out of crude oil at least till 50 EMA. Next buy trade will only happen if we have a bullish engulfer above 50 EMA or if we are broken and close above this high. So let's see how this plays out or not. Again, that is not a valid zone. If I look here on Oana, this could be just a pullback, and the next zone is right here, and this could be just a pullback. So I'm not going to enter this trade, but in general, I'm just expecting some pullback. So again, that is not my entry, but looking at this double top and divergence, I'm expecting some pullback. I will buy from here if there is a buy conditions. So that is it for today's video. Hope you got a value. If yes, hit a like button for me, subscribe if you're new, so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next video. Till then, take care.